Okay, before we get started, just a quick message about Luno. So the Luno wallet allows you to buy, store, and swap your cryptocurrencies, anything from Bitcoin, XRP to Ethereum. If you sign up right now with the code in the description, you get £10 free Bitcoin when you pass verification, and from there you can buy for as little as £5. So you can start your cryptocurrency journey with the Luno wallet. It's safe, it's secure, and minimum purchase is £5. Okay, so before getting started today, just wanted to quick mention Bitcoin price, as you can see behind me. Currently trading above $42,500, which is great to see. Still don't think we're out of the woods yet until we cross over the $52,000, but it does look like the bottom may be in. Great entries yesterday. ADA 107 was a great entry, and also Binance coin at 419. So hopefully you got involved. If not, I'm pretty sure there's plenty buying opportunities to come. Today's video, we are going to look at why I think Bitcoin's so important to have an investment in, why it's important to have exposure to it right now, and what goes on in the legacy market that makes Bitcoin so attractive to, in particular, millennials. So if you're interested in any of that, please hit the like button, hit subscribe, and follow us on Twitter at Scotsman Crypto. Okay, so behind me is something I found online. It's the US debt clock, which shows the current US national debt as $29 trillion, which is a staggering amount. But what's even more staggering is when you look at federal spending, it's currently almost $7 trillion, while tax revenue is only $4 trillion. So even though $29 trillion in debt, they keep spending and spending. Joe Biden's Build Back Better plan is another $3 trillion that he aims to spend. All the while, they can't afford to pay their bills. And what they're doing is they're borrowing more money to pay back older debt, which incurs newer debt, which is just a vicious cycle. And if you think about it from your personal finances, it's something you would never ever do. Okay, so today's episode is all about the traditional financial system and why I think Bitcoin is so important to have an exposure to. Episode was pretty much inspired by the questions I get all the time on why I believe in Bitcoin so much. I also watched a podcast recently with Jordan Belfort, which is The Wolf of Wall Street, if you don't know, and Russell Brand. And in that, they discuss Bitcoin and why Bitcoin's so popular, especially with millennials and the younger generation. So, to start with, let's talk about the legacy financial system. So, the financial system is designed around debt. This couldn't have been made clearer than the debt clock, but think about it from mortgages, from car payments to credit cards. We are encouraged at every instance to take on more and more debt. Every time you go into a shop, they offer you a store card, which is debt. When you buy a used car, it's encouraged for you to take out a financial product, because again, more debt, and they get a kickback from encouraging you to take on this debt. On top of this, there is no incentive to save. The best ISA I could find in the UK currently offers a 1.45% return on a 5-year investment. Now, with inflation currently being about 5%, tomorrow's CPI will probably put inflation about 7%. A 1.5% return guarantees you will lose money in terms of purchasing power over the long run. On top of this, if you have any emergencies or you need access to that cash, there's normally heavy financial penalties to get access to your own money, which is earning peanuts in a bank account. Okay, so this is one aspect of the financial system. The other aspect is how to get ahead. So it's widely accepted that in order to beat inflation, you need assets. Property, stocks and shares, anything that appreciates over time. Property, great investment, always appreciates over time, but a high barrier for entry. Most people don't have the amount of money sitting aside to afford a second mortgage in order to get a rental property. And if something goes wrong with that rental property, obviously there's a big risk that you won't be able to pay for any repairs, or if, for example, the rental market turns upside down, can you afford the mortgage without a rental tenant? Most people, that's probably quite a stretch. Stocks and shares, again, difficult to get involved with. A lot of these people, especially Wall Street, have been doing it 10, 20, 30 years. They have vast experience. They know exactly which companies represent value. They know which ones are on the way up, which ones are on the way down, when to buy, when to sell. And for the ordinary person, that's too much information to accumulate and put into practice. On top of that, often there's lockup periods, there's minimum deposit limits, and to be honest, it's just a big risk for a lot of people. On top of all this, you've got the fact that stocks can be manipulated. If you don't follow Anthony Pompliano on Twitter, I suggest you do, and his Best Business Show is one of the best shows on YouTube, best podcasts I listen to, not just for crypto information, but financial information. It's great to watch and listen to, so I suggest you follow that. But he tweeted last night that while the S&P 500 had a record year in 2021, only 3 hedge funds managed to beat the returns that the S&P 500 would have given you had you invested at the start of 2021. While at the same time, 35 US politicians managed to beat the returns of the S&P 500. How can 35 US politicians manage to beat the stock market and beat every hedge fund bar 3 in the United States? Simple. It's fixed. The system's rigged. It's corrupt. US politicians have inside information on what companies are going to do well based on what policy decisions. Now, I'm not going to dig out Nancy Pelosi because she always cops it, but it is suspicious when your US politicians are making stocks, investments, and decisions on their personal finances based on the policy decisions they're put in government to make, without sharing that information with the population. So they make these decisions ahead of time. They know when rate rises are coming. They know when rate rises are going to affect their stocks and shares. They know which policy is going to impact their companies that they follow, and they make stock buying and selling decisions based on that. It's completely corrupt, and in my opinion, until the system's designed so that these people in government aren't allowed to hold or access their stocks and shares, we'll never have a legitimate investment system. Okay, so how does this relate to Bitcoin? Well, basically, as Jordan Belfort said on the Russell Brand podcast, cryptocurrency, and especially Bitcoin, and the Bitcoin community have worked out the system's rigged, and the only way to escape the system is digital assets which are decentralized, have no governing authority, and that can be bought by anyone for tiny amounts without prior knowledge. Bitcoin has a fixed supply of 21 million Bitcoins. It's decentralized, so it doesn't have a chairman, it doesn't have Fed Jerome Powell coming in and deciding when rate rises are coming, and no one knows what it's going to do, so there's no manipulation. So while Nancy Pelosi can sell her stocks before a new policy gets announced, she can buy up another technology before the government releases some subsidy for that industry, Bitcoin doesn't work like that. It's based on simple supply and demand. Who's buying, who's selling, and the price will go up if more people are buying than selling, and the price will go down if more people are selling than buying. Bitcoin offers, in particular millennials, because they're so involved in it and so interested in it, the opportunity to escape this race, this game that's rigged by these politicians, these wealthy billionaires that got rich through government subsidies or government policy and are now changing the course of government policy. Cryptocurrency allows people to put in a little bit of time and effort, a bit of research, add in some money and see astronomical gains. But if we take it back to the legacy financial system, we looked at an ISA at the start that offers 1.45% returns over 5 years. Bitcoin, in the last 10 years, the average returns over that period is 60% per year. And if you actually look at from 2017 to now, the returns are astronomical and way outstrip any other asset class in the world. So for me, it's a no-brainer. The legacy financial system's broken, government don't care and are happy for the inequality gaps to keep growing. No bank account can offer you any decent returns to fight inflation, and on top of that, assets are becoming more and more expensive to get hold of. So for me, exposure to Bitcoin is massively important, and it's how in my opinion, we transfer wealth from this generation to the next without all these billionaires and this centralized control. As always, this is just my opinion. Please do your own research before buying. If you are interested in getting involved in Bitcoin, I would suggest the Luno app because you get £10 free for nothing. You just need to sign up. But in my opinion, Bitcoin is going to grow and grow and grow. 21 million Bitcoins, there's more millionaires than that in the world, so not even every millionaire in the world will be able to buy a Bitcoin. The price is only going to rise as adoption keeps growing. The last numbers, I think Bitcoin adoption had faster adoption than the internet, and there was a lot of detractors when the internet launched. So for me, there's only one way Bitcoin's going to go. It will be $1 million one day, and I'd rather get in now and stay invested for the long run. Before we finish, if you are involved or want to get involved in Bitcoin, I would strongly recommend that you always dollar cost average. So what that means is you buy a set amount, so whether it be $10, $50, $100 a month or a week, whatever you're comfortable with, and make sure that you're comfortable losing that if something did go wrong or the bottom fell out of the market. But you invest that same amount every week or every month, whatever time horizon works for you, and then just not look at the price, because over the long term that will give you the best average price. And if you dollar cost average for a year and then switch off and come back to it in 10 years, the returns you could have could be huge, especially if Bitcoin keeps averaging at 60% returns each year. Okay, well, thank you for listening. Like I discussed in the show, Anthony Pompliano on Twitter, on YouTube, great resources. And thanks very much for your time today. Please follow us on Twitter at Scotsman Crypto. Keep liking and sharing the YouTube videos and subscribe so you get notifications when we come online. And tomorrow we will be covering staking, some Launchpad tokens, and how to get involved before tokens go to exchanges. Thanks very much.